Hey everybody, good morning and welcome to Friday, the 26th of May. My name is Doc, this is Ready, Set, Trade. Away we go. Let's see, we have things happening today. How it started with FANG and how it currently is going with FANG. Netflix replaced by NVIDIA, apparently. Okay, so today we had durable goods. And PCE already came out this morning. We have consumer sentiment coming out at 10 o'clock. Don't expect that to be a big market mover. But PCE was actually, it came in hot. The initial reaction was to the downside. We seem to have recovered all of that initial reaction. I don't understand, but we're not here to understand why the price moves in the direction that it does. So if anything, this gave it certainty, and what we saw immediately, almost immediately, was the fact that we have flipped the probabilities now for the Fed to continue their assault on Western civilization starting on the 14th of June with yet another rate hike, which is consistent with all the Fed speak that we've been facing lately. Over the past 2 weeks, they've been saying, hey, we're not done yet. We can't stop now. Yes, you can. But anyway, the PCE is their favored consumer inflation gauge, and it's hot. They don't like it. So here we go. Now, it looks like by July, though, we've done this before, but it looks like by July, there's a 50% chance that they won't touch the bot anymore. So maybe this next one is going to be the last one. But it's, I tell you what we've seen is always the last one that they do is usually, or that when they pull back from rate hikes means that they've gone too far. And this is what we've always seen. Every time that they say, you know what, we're going to take a pause this time. We may get an initial shot higher on that sugar rush, but that usually means that we're done, and we're heading down from there. So this is not to be taken lightly. Earnings. So obviously the market's still buzzing over earnings from NVIDIA. Let's see how Costco did the other day. And that was last night. Or no, this morning. No, it was last night. Get it straight. Okay, so last night, Costco all over the map. Costco all over the map. Have you guys seen Target? Target has, I think, made a huge tactical mistake. And I think you guys know why. But this is not a good-looking chart. It has, once again, been rebuffed by the 200-day moving average, and that is right after earnings, plus all the other publicity that they're getting lately. Big mistake. Okay, so let's see, what else do we have here? Next week, we've got some interesting candidates. We have HP, we have Salesforce.com, CrowdStrike, GameStop, Lululemon, Zeroscape, and Dell, as well as a couple of retailers here, Dollar General and Macy's. So more fun next week, 4-day week. All right, next week, Monday, market holiday. So I recommend you taking the day off. I am out on Tuesday, so I'll be back Wednesday through Friday next week. So I'll try to put a reminder out there for those of you coming into the room saying, where is everybody? Okay, so today, we are, green light, yellow light, iron flies. We can do what we want. Let's see what we have in terms of the implied volatility for today is about 25 handles, kind of like what we discussed in the newsletter last night. So that's dandy. That will work. Yesterday's zero DTE stuff worked great. And I'm a little bit more confident today than I was yesterday. Yesterday was not confident that the price would stay in the range. So what does that tell you? Hey, Bob and Calvin, good morning. And anybody else out there, good morning. Welcome to Ready Set Trade. So we're going to be looking, that's 4 minutes away from the opening bell. And right now we have an expected move of 25.771. Let's look at yesterday for a minute. Yesterday was actually pretty darn good. So the opening range yesterday was somewhat bearish, not overly so. So we're going to draw this up until 10 o'clock. All right, so that was our opening range yesterday, and it was actually flattening out and looking pretty good. I just did not think that we were going to stay within that range. Did not think so. With all the debt ceiling stuff going on and all the cross currents from NVIDIA, I thought we were going to see lots and lots of volatility. Now, we did see a fair amount of volatility, right? So price gapping up yesterday. Thought we would fill that gap. We never really did. Never really did fill that gap, at least in the morning. Okay. So this turned out to be a really, really nice day. For those of you that did this, either the expected move iron condor or the iron butterfly. The iron butterfly was decaying like crazy in the first 30 minutes. It's very, very nice. I just thought we'd see a whole lot more price movement than we did. Okay, so we'll map things out. We have about 2 minutes to go before today's. And I'm a little bit more thinking that I may be more aggressive. So I think first thing out of the gate is once we can determine that markets are indeed offering some kind of decay, I will get into another one of these expected move iron flies. So that gives me roughly 50 points of room, plus or minus 25. 50 points of room, which the price has been staying in within. I mean, we've been seeing 40 to 50, but mostly within that. So I think that'll work out okay. So you can see the reaction after the reaction after PCE was to the downside, and then it's recovered just about all of that. Okay, we got about a minute and a quarter left to go. Right now we see futures up on the S&Ps, mostly up on the NASDAQ. The NASDAQ is still staying strong. We are seeing futures up on just about everything. So we'll see here in a minute what is moving and grooving. Looking really quick out at AMD. AMD is up $2 in the pre-market. And NVIDIA is up, it's about flat in the pre-market. I actually sold some puts on NVIDIA around the $300 level yesterday. And those have actually done quite nicely. I just set those up in the morning. I'd buy NVIDIA at 300. I'd buy NVIDIA at 300. Not a super efficient use of capital, but you never know. These things can split, and then it becomes worth something more. Okay, we got about 10 seconds left to go. So what I want to focus on here is I'm going to go back out to the SPX. Focus on these options here for 26 May. These ones will expire today. Right now we're sitting at a 25.69 is going to be our opening expected move, 25.69. Yesterday was 28.87, so 25.69. And we're going to go grab our opening print for today. Opening print for today, we will find through a gap chart. I'm going to go out to my ES gap chart. You can see that slight gap higher today. We still did not fill yesterday's gap, so that one is out there. That one's out there. We've got gaps all over the place here, guys. Okay, so today's opening print was 4166.5. 4166.5. So that gives us an upper expected move, 4192. on the ES, and lower expected move 4140.81. So let's go ahead and mark those in. Upper expected move 41.92. This is not going to move all that much. 92.19. 92.19. Lower expected move 41.40.81. Okay, so there's that. Now let's move our anchored VWAP up to today. And there we go. There is today's battle zone. Okay, first thing I'm going to do, I'm going to go over to our analyzer and put in a 30-point wide iron fly. 30-point wide iron fly. I'm going to center this around 4170. And make this 30 points wide. So the upper call is going to be 4,200. And then 4140 is going to be 4140. So that gives us a $19 credit. Now I have located this fairly aggressively. So what I want to keep an eye on here is what's happening with the expected move. So we started off with 25.69, and now we are up. We were up there for a second at 26, 25.9. So it's actually increased just a little bit. Okay, let's also set up a risk profile for an expected move iron condor. So there we go, 41.35 to the downside. $41.35, $41.30, and then we'll come up here to say $41.85. $41.90. That's a bit more, so that's a bit less than an expected move. It's a little tight, and I might move this one. We're seeing some positive print here. Seeing a little bit of a move here. Okay, let's go back over to this guy here. If I start to see some, so I like where that one's located right now. That should probably do well. I'm going to see if I can get that fly on in a separate account. Okay, there we go. So I'm going to put this fly on in a separate account down here. And that was good for 1915. And I'm just going to let that one cook in the background. And I'm going to set it up and exit for 1815. And just ignore it. Okay, let's see what's happening with the price here. Price is normalized in the middle of the opening range. Let's see what we have in terms of market watch, heat map, index watch, what's going on with our internals. Do markets want to buy into a long weekend? VIX is way down today. Still strong on tech. Still strong on tech. Okay, so let me do this. Let's see. I think I want to center this a little bit better. So I want to move this up 90, 95. And then I want to move up the puts here. So 40, 35. And that's a lot better. Okay. So this is the one I think I'm going to take here. We'll try $1.85 to begin with, and then move it down. Well, there we go. Okay, so I got in for $1.85, so I'm going to look for a $1.35 exit. I'm not going to put this one in the room. I think these are still very aggressive. We could get any kind of movement today. $1.35. Okay. I have no stop on that position. There's no stop. So I think the price will stay within there. If it does not stay within there, I will look for a elegant exit if the price will revert. So unless we start to see the price going above 4,200, I think that's the only point where if we get an upside squeeze into the weekend above 4,200, I'd find that hard to believe, but anything can happen. Anything can happen. And I'll keep an eye on this butterfly as well, too. Entry point on this one is about 41.67. So my stops are supposed to be 41.41, way down there, and 41.93. And those are on the SPX. Let's look at market internals. We seem to have a little bit of a rally on our hands today. So far in the first few minutes, we're seeing some strong ticks coming in. That's a buy program. That is a buy program. Big, big, big green candle on the advancers. Good Lord, look at that thing go. So far, we're seeing all kinds of support at the anchored VWAP. We are seeing support at the anchored VWAP. So is this a usual market game where it's like buying them up to sell them later into the weekend? Could be. That we don't know. We won't know that for a little while yet. Won't know that for a little while yet. But so far, the internals look pretty good. That was a strong buy program that hit the tape. Let's see what we have across the board here. Okay. As we close out, we're looking to close out pretty soon the month of May. And the month of May has just been nothing more than range-bound junk. And this week alone has just been range-bound junk. And so far, here is our daily candle, which is a little bit of green after a pop. And we're approaching exhaustion again on the 78-minute chart. Interesting. So watch how the price handles the VWAP today. So if we test off the VWAP and it bounces every time, then believe it. But if the price cuts through there, so this is the result of a big buy program. And I don't know if that buy program is meant for accumulation, where people say, hey, awesome, we're raising rates in a couple of weeks. That's great news. So it could be happening, right? The other thing that could be happening is, hey, that sucks. Let's do a quick buy program and then turn right around and sell it to them once we get retail chasing after this market. Yeah, let's see. What do we have moving today? Surprisingly, silver is moving today, as is gold. Very surprising. Let's go out just to a single chart. There's that big ascending triangle pattern. We keep coming up to the 4,200 level. So let's see what's happening with silver, first of all. Silver bouncing off the bottom at 21 GLD, bouncing off 180. What else do we have moving? NVIDIA continues to slightly move higher. AMD looks like it's in an exhaustion pattern. It gapped higher today. This could be an island gap. Watch out for this gap here. It does not have to fill, though. Neither does NVIDIA. We've seen this before on Meta. Meta is just screaming higher right now. Amazon looks like it's moving. That's actually a nice looking flag pattern in Amazon. Setting up. Let's actually look at this on the fractals on Amazon. Is this something that we could take advantage of? Daily energy building up. Looks pretty good. We're way past earnings. The trouble with Amazon is looking at this. If we're playing like a 35-day, oh, I take that back. We're down to single point strikes again after the, so we could do something with this. Like, let's see how much skew we have. If we did a 2-wide vertical, we'd want to get into this for about $1. So there's a certain amount of skew to this as well, too. That means a lot of people are buying puts. Okay, so we are getting some time decay, which is good. Price is still within the range of the expected move iron condor. No worries so far. Nothing to do with this one. So it's really only if we start to see the price really blow outside the range above 41.90 that this one's going to have, we may look for some type of an exit on a pullback. And so we got all day to do that. I've had to take these things all the way into the close before. All the way into the close. But it's just about break even right now, so that's okay. All right, let's see what's happening to the price. Shake and bake. VWAP heading higher. Let's look at what's happening across the board. So we have most sectors are up today, especially tech, especially discretionary. So that's going to be your Tesla. Tesla is up 1.4% today, and Amazon is up 1.6% today. Okay, Apple is up 0.85%. So we have most of these. Microsoft is up as well too. Google is slightly down today. Slightly down. Consolidating at a weekly exhaustion point, so no surprise there. Okay, let's go over here. Let's look at, see what's happening on the Dow. Dow is mostly up, and a lot of financials are up too, like Boeing, well, American Express. We have, let's see, JP Morgan is up, United Health, just about everything is up with the exception of Walgreens, Travelers. And then if we go out to the NASDAQ is smoking again. Adobe. Baidu, DocuSign, Cisco. Okay, doing pretty good. All right, we have the S&Ps tipping over slightly. Let's see what's happening with market internals. Market internals are tipping over as well. We're starting to get some negative ticks coming in. So be careful about chasing this one into a long weekend. All right, let's look at some of the 45 DTE positions that we're carrying. Let's see. First one we got is a 23 June. So we're going to go all the way up here. 23 June, and this one sliding down slightly. This is that 25 wide one that we did. Let's see, the next one I have is a 30 June. $43.40, $43.45 is this one here. That one's doing okay. Again, all of these, due to skew, we have to center them. This is why we use the 30 delta down there. Let's see, we have another, a 43.20, which I think is this one here. That one's slightly underwater at this point, but there's a tremendous amount of range, so we're going to have to let this one just decay. We don't have to get out of these for a couple of weeks now. And then we have a 7 July. Let's find our 7 July, which is 43.75, 4,400, which is this one here. And that one's doing lovely. See how the skew works out? So it really does help if you center these things in the bottom third. And that's where your fastest time decay is going to occur, right at that point. Okay. So those are doing okay. Those don't need any attention for right now. Our expect to move iron condors back to break even. And this guy is doing very nicely. It's up about $1.50 right now. And I'm looking for $100 a contract on this trade. Should not take too much longer. Anybody have any questions? Anything anybody wants to see out there today? So we got a few minutes left here in today's session. We're tracking this. So far, this is fairly bullish. So far, fairly bullish. We'll watch the internals. The internals did have that big spike up here. We're reverting back to the mean now. The tick is still slightly negative, right? So we're just kind of drifting down, and that's what I would expect to see through most of today's price action. It's just very drifty stuff. Very drifty stuff. Watch out for the Russell. We got to keep an eye on the Russell because this could be a warning signal here if the Russell starts to break down. This is a big bear flag to begin with, so that's not particularly good, which could squeeze. It could get everybody bearish and squeeze to the upside, which would surprise a lot of people. But I think a lot of this is based on whether the banking system is stable enough to act on its own from here on in. So just tracking the iron fly here, we entered at 936 and doing pretty well on profit factor and win rate and stuff. So it's been a while since I took it on the shorts and stepped in front of a trend, but I've been a lot more aggressive lately entering early. Okay, so here comes the next run. Is this going to lead into a lower high and roll over, or is this going to give us new highs for the day? We'll find out here shortly. Yeah, this one's still a break even. So this This trade for the expected move, especially unless we see the price go down in the near future, this one may take a while. This is for me to get $50 a contract. This will probably take, if the price stays where it is right now, it's probably going to take at least another 2 hours of decay. So you got to be patient with these things. You just, get on with your life, get other things done. And we have just fired, the Iron Fly just fired for $100 a contract. So this one here, it's good for $200 in 2 contracts. And the price was not exactly flat either. So the big thing that we did get was time decay. So we started off the day with, what did we start off with? 25.69. The implied volatility, the expected move actually went up to 26 and change, and that's when we entered. So this was as much of a Vega trade as anything, because the implied volatility started to drop after that point. So now we're down to 23. So we got some good movement there in the way that we expected. And the price was not, you wouldn't exactly say that this was very flat, but this shows that sometimes getting in and getting your fair share and getting out faster can actually be less risky, can actually offer you less risk than something with a wider spread. So that was kind of the lesson for this week, is that so even a trade with a lot more inherent risk like this one, depending on how you manage it, can be your friend, versus something which is much more conservative, which is this trade. But it makes you stay in longer. So it comes down to what you want to do, right? The one thing I do like about the expected move trades is you don't really have to manage them. You don't have to sit there and say, all right, what's moving? Or you really don't have to put a stop on these if you don't want to. And typically what I find is I don't want to. Stops will almost always lock in a loss for you. Stops will almost always lock in a loss. Occasionally, very occasionally, they will prevent you from taking a bigger loss. But if you're okay with a loss of 315, even if it's extremely rare, then I'd rather just keep chipping away and keep hitting these base hits. But definitely with the Iron Fly, you cannot let these things get away from you. You cannot let them get away from you. So typically, this is why we track, the price is coming down now again. This is why we track those stops on there. If the price does start to exceed those stops, I don't have a hard stop with a stop market on there, but I will say, okay, do I really want to stay in this thing? And I've seen situations before where the price will come down to, maybe I'll have a stop which is very close to right there, and then I'll see the price come down and then start doing this thing again. And if it does that, then I'm like, okay, let's see if this transitions into an uptrend again. And more often than not, it will, because we get mean reversion off of these expected move markers. And so doing less actually turns out to provide better performance, just doing less. It's not what people would expect. Okay, so here's our bounce. We got a 10 o'clock news coming in, which is what? Consumer sentiment. Ooh. Usually not that much of a market mover, but we are seeing some movement here. Okay, so keep your eyes peeled on this. You can see now we've had yet another test of the anchored VWAP, and so far these are holding. So we have to believe the bullish sentiment right now. We have to believe the bullish direction. Okay. Well, I hope everybody has a great long weekend for Memorial Day. You guys remember why we celebrate Memorial Day? I will be out on Tuesday, as I've mentioned, and I'll be back on Wednesday. So newsletter should come out tomorrow like normal at some point. I'm volunteering for one of these local, it's like the Scottish festival. So I am the Iceman, which I don't know what I have to do yet, but I think it involves running around in a golf cart with big bags of ice and trying to avoid men with kilts hitting them. So I am the Iceman. I'm sure at some point during the day I'll be referred to as an ice hole. I can't wait. All right. Well, guys, you guys have a terrific weekend and spend some time with your families and get away from the market for a couple of days. And we'll see you back here on Wednesday. See you on Wednesday. All right. Down she comes. Adios, amigos. We'll see you soon. All right. Bye now. Be good.